small business owners to develop a value banking relationship that includes business consultation, business connections, and access to capital. Her favorite way of doing this is by introducing your business to other qualified businesses and their clients so that your business can grow. They may or may not lead to banking relationship with Gateway Bank right away, but that's okay. Shellie knows that building mutual relationships is the key to business success, resulting in referrals and repeated business down the line. She and her husband, Bertrand, have been married 22 years and live in Gilbert with 3 children. Elena, 21, Desiree, 19, and Bertrand, the second, is 16. The girls are in college and working, and their son is in 10th grade at Highland High School. Shellie enjoys studying the Bible, deep conversations with close friends, playing family games, hiking, and laughing at the dinner table. Her burning desire is to advocate for the underserved, overlooked, and misunderstood populations in the United States through teaching and training. Her key to success: joyful attitude, humble gratitude. And let me introduce the second speaker. Tarisa Shelton was born and raised in Arizona. She graduated with a bachelor's in design studies and management from Arizona State University in 2015. After graduation, she traveled to multiple countries to try and learn from different cultures and perspectives. With being excited by what the world had to offer, she taught English in South Korea to elementary students for a little over a year. After traveling and teaching in Korea, she worked as a production manager at an animation studio in DC. During that time, she committed herself to learning as much about finances as humanly possible. Through that journey, she found infinite banking in 2018. Since then, she has been helping clients, family, friends implement this process to fundamentally set a financial foundation that is unshakable and sets them up for success, not only today, but for generations to come. I welcome our 2 speakers, and I turn it over to Shellie and Tarisa.
Thank you for that sweet introduction. We're going to jump right on in. I've got lots to cover, and then Tarisa's going to piggyback right after me. So hold on to your seats as I go through this. Do you see a screen shared right now? Let me try this one more time because I'm not sure if the right one is sharing. Let's see. Oh, I got it.
It was perfect. It was perfect.
It was, okay. Yep. Usually I get a notification on my end and I didn't. So let's just make sure. Okay, there we go. It's perfect again?
Yes.
All right, good. Perfect. All right. So you can hear I'm excited to be here. I'm excited to share my insights with you on this. I'm going to move my Zoom controls out of the way so I actually can see you guys. There we go. I'm not going to be monitoring the chat. Just want to let you know I'm not going to be monitoring it, but I encourage you to have it open, use it to talk amongst yourselves, maybe discuss further some of the things you're going to hear me bring up today. Generational wealth begins with a mindset shift. It builds with ownership and it thrives in a legacy. And we already heard some of that in our sponsors speaking today. I'm going to start with the mindset shift, and I'm going to go back to it briefly at the end because I think that's where it all must begin. In order to create generational wealth, you've got to shift your thinking from working hard to working to get ahead. Many of us were taught how to work hard, but not how to work to get ahead. If you want to create generational wealth, you stop thinking like people who never get ahead. Okay, so I want to share with you 4 types of people who are stuck in the mindset of working hard, but never getting ahead. And as you listen, see if you can relate to any one of these types. If you can, stay with us because there is hope and some practical tools to help you shift this mindset. 4 types of people. First person, the blame shifter. She's not taking responsibility. Who comes to mind? Usually we can have someone that comes to mind right away, right? Blame shifters don't just blame other people, which is possible, but they also might blame their upbringing, the law, or past mistakes for never getting ahead. excuse maker. She always has a reason for not starting or for giving up. Or maybe she has started and stopped, but now she has a reason not to begin again, yet alone get ahead. Lazy worker. Now, I know none of us in this room fit this type, but have you ever noticed the lazy person never seems to notice or admit she's lazy? I mean, and the attitude often is one of entitlement. As a society as a whole, I'm seeing this more and more. We've got to get unstuck from that mindset. We were created on purpose, for a purpose, to be productive and impactful. And that's how you get ahead. Okay, fantasy chaser. And I'm going to say, ouch, ouch, ouch. And I'm sorry if I'm stepping on your toes on this one. Have you come across this person? As a banker, as one who works with business owners a lot, I'm familiar with this. She's undisciplined and does not heed to wise counsel. She has these great ideas with no strategy or plan of action. Her attitude is this: I'll just hustle and grind and see what happens. If it works, it works. If it doesn't, it doesn't. If I make it, I do. If I don't, I don't. Meanwhile, she's piling up debt and hardship and setting that example for future generations. Maybe that wasn't you. Maybe that's somebody in your family. But that's the mentality of the one who works hard and never gets ahead. In contrast, a person who gets ahead is disciplined and has a generational network. What do I mean by generational network? I made this term up, but I have a definition. I defined it as this: a professional community of people with a generational wealth mindset that extends generation after generation. So for today, right now, this has to be developed, which doesn't really exist yet for us. While striving for generational wealth, we need to we need to accept the fact that we cannot accomplish or sustain it in a vacuum. We must come together and establish a foundation of people of various influences, talents, successes, and backgrounds upon which to build and grow a generational network. As a whole, our white friends have been doing that. They have had centuries to build this kind of network. We must start now. See, when our kids graduate from school, let's be able to pick up the phone and hook them up with a good paying job or with a mentor to help them get ahead. As we grow our own businesses, let's be able to pick up the phone and call someone who's reliable to help us achieve our goals instead of having to hustle and grind just to make it. You know what? I'm not knocking hustle and grind. I mean, I do it every day. But if we're going to hustle and grind, let's do it to get ahead, not to just stay where we are. When there's a recession or when hard times fall, when you have a generational network, when that's created, it's there then to support us. It's to support our endeavors for generational wealth. So our kids' no longer have to start from scratch. Do you feel like you're starting from scratch again and again? You feel like your grandparents have to start from scratch, your parents, and now you? A generational network can help combat that. But this requires radical thinking. This requires that those of us who have already made those reliable connections, we need to seek those who have not, educate them on the value and necessity of a network of integrity, and, examine and vet their mindset, because not everybody's ready for this. But those who are, invite them in. Be intentional to build these relationships. Now, I know some of you are thinking, I've been burned in the past, right? This is not going to be linear or a perfect process, though there will be setbacks. You will discover those who will attempt to cheat you or who make promises that they do not intend to keep. We have to discern that, right? But the more we take steps to create a generational network of professionals that carry the generational wealth mindset, then the less likely we will attract those 4 types of mindset stuck people. The more likely we will be able to sniff them out. So we do not give up, okay? We pass on what we know and who we know to our like-minded friends and colleagues, to our children, nieces and nephews, neighbors or cousins. That's how you get ahead. That's how you improve your ROI of your time in your relationships, your return on investment of your time and relationships. That's improved with generational networking, a generational network. But let me warn you of what not to do. And I can speak from experience with this, especially when it comes to family. You cannot create generational wealth or build a generational network if you continue to operate under the thinking of, I have today, I may not have tomorrow, so I need to spend it now. Or I don't want to be labeled a sellout, so I better not scale up too fast or make this connection with this person or pursue an opportunity with this company. What if I fail? How would that look? Or, and maybe I'll hear some ouches after this one. I'm racking up credit card debt because I will betray my family member if I don't help him pay on his debt. Again, you cannot create generational wealth or build a generational network if you continue to operate under that thinking. You will not know how to apply the tools for generational wealth unless you change your thinking. Okay, Shellie, so then, right? How are we supposed to think? What are we supposed to do? Be disciplined. And that means you got to resist that old generational thinking that keeps us from getting ahead and take captive those thoughts. Identify them for what they are. They are residual effects from generations of trauma, lack of knowledge, or systemic oppression. They may have happened to us, but we can choose to be ruled by it or turn from it. Be consistent. This just simply means repeat the changes you are making, the good changes, and begin again when in a slump. Don't be the excuse maker and stay there once you've stopped. Begin again. Be trustworthy and wise. Live with integrity. Decipher those who are not living in integrity. And guess what you're going to have to do? Limit your engagement with them. And lastly, raise your gaze. This means you're going to have to delay your gratification. We're in an instant gratification world and it's not working. Delay your gratification. When you do, there is greater later. Tarisa will talk more about how to do this and how to get there. So it's important to know that generational wealth builds with ownership. For most of us to build today, to build ownership today, I know it goes kind of against one of your first core principles, but sometimes it means you got to go into some sort of debt. I know it sounds counterintuitive and it could be painful, right? But it also can be very powerful. Borrowing responsibly leads to building ownership, which leads to generational wealth. Because instead of leaving your family with something to owe, they have something to own and build upon. It goes back to that mindset, raise your gaze. There is greater later. LaVon Jackson McConaughey, you see her on the screen here. She's a Black woman business owner, that's obvious, right? And she owns and operates 2 Meineke franchisees in Mesa and is in the process of owning her 3rd. Her story is inspirational. I'm not going to go into it in depth here. She has been highlighted by the Black Philanthropy Initiative, and I have a link to that video that I want to paste in the chat, and I'll do that in a little bit. Also, our very own Shannon Talbert owns 2 modern acupuncture franchisees. You heard her commercial. One of them was made possible through bank lending. Now, these 2 amazing ladies, they may be in debt today, but they have raised their gaze on creating generational wealth. Wealth is not built in a day, but is founded on lifetime ownership. If you want to start today, that may mean borrowing money now to buy something that appreciates over time. Understanding that as you pay it back, you increase your net worth. For example, buying a home with a home mortgage or business with commercial lending. And I would love to go into this more from the business banking side, but I don't have time for that today. The point is, you can use your debt to work for you. You can use it to get ahead. It requires you to be disciplined, be consistent, and trustworthy and wise. For example, if you can qualify for a second home, rent it out. If you can qualify for that second home, rent it out because you can generate income that way. And if you're wise with your pricing and lease terms, you can generate wealth. You carry a debt, but you're building wealth. If you prefer not to take on more debt, or better yet, while carrying a debt, it is possible to start a foundation of generational wealth building by investing in securities or life insurance. And this is where a qualified financial advisor comes in. I think we've got two I've heard already on the call today. When it's Tarisa's turn, she will share another very achievable and reasonable way to create that foundation necessary for generational wealth to occur. She'll do that in just a moment, but let me talk about how generational wealth thrives in legacy. This is where we will find the motivation, inspiration, and hope. My dad, Ray Burks, he grew up in the segregated South and entered college as the civil rights movement was nearing its formal end. He is the first generation male to graduate in his family. And what he and my mom have built, they will be able to leave a legacy for my brother and me. And that is what you call a legacy, that what they've built, they'll be able to leave. And not just for my brother and myself, by the way, but also for our children. Despite the odds and all that was against him back then, my dad was determined, persevering, strategic, and self-educated. We can all take a note of that. Determined, persevering, strategic, and self-educated when it came to building wealth for his family. No one gave it to him. There was no generational knowledge to pass down. There was no internet. He had to figure it out on his own. And there certainly was no generational network either. Today, my dad has realized his time here on earth is running out. And not that he wants to rush things, but it caused him to think about how he's spending his time and money, about the legacy he's leaving. Just this year, he contacted his financial advisor, and instead of doing what he had been doing, giving away money his grandkids were simply going to spend away, he opened investment accounts, is funding those monthly, and is teaching his grandkids what it is, how it works, and why it's important. He's modeling generational wealth. Is he wealthy? Well, no, not really, according to American standards, but he has shifted his mindset. He has built ownership, and he is leaving a legacy that makes a difference. Listen, if he can do it, so can we. To review, to create generational wealth, we need a shift in mindset, build ownership, and leave a legacy, right? Tarisa will give a very tangible tool to get there, to help us get there. But I'd like to leave you with some principles to ponder as we shift our mindset. Okay, so ultimately, the goal is to gain more money, more ownership, more education, more knowledge, right? But you're gonna need something greater than those things to lean on, to motivate you when times get tough, because they will. So here's the question. What is your more for? If you ask my dad, his more is his grandkids. For me, it's my unwavering belief that everything belongs to God. And because I understand that, I can be a good steward over what he gives me. To close, there are some principles that guide me and my dad, and have proven trustworthy and true. And we'll run through these slides real quick and leave you with the final thought. To whom much is given, much will be required. Luke 12:48. Let us not become weary in doing good, For at the proper time, we will reap a harvest if we do not give up. Galatians 6:9. And one final thought, ladies. I'll turn this over to Tarisa. Anyone can spend time. Anyone can spend money. How you spend your time and money determines your generational wealth. All right, Tarisa, that's it for me. Thanks, ladies. She's going to show us how to get there.
Okay, awesome job, Shellie. I love that. That was so inspiring. I want to make sure, can everyone see my screen right now? Okay,
Yes.
Perfect. So I just kind of want to expand on what we've all been talking about today, which is how you can build a generational legacy and ownership. We can kind of conceptualize and talk about these ideas, until we're blue in the face, but until we take action and we start planting those seeds, that's when the magic starts to happen. So my name is Tarisa Shelton. I'm here today to tell you how to learn to build wealth like the top 1% and keep more money in your family. So we'll be covering these 4 points. So the first one is the importance of life insurance. The second one is the infinite banking process. The third one is the problem. And then last but not least, I'm going to walk you through my own personal family system, because I find that that's how we learn best, is through examples. And so I'm just going to put my business out there today. All right, so we're going to kind of start out with a few disappointing and kind of staggering facts. So this slide says the McKinsey report estimated that the disparity in wealth between white and Black households was over 330 billion, with 60% coming from inheritances. This is a trend that, if not addressed, will only carry on for generations to come. So this just really shows you that money is passed on through life and through death, right? And I'll never forget this, because when I was teaching English in South Korea, this is before I kind of started getting into this financial realm, my friend Taryn, who's from South Africa, said, Tarisa, don't you understand how white people transfer wealth to their families? And I was like, no, what are you talking about? And she was like, well, think about it. We have 2 guarantees in this life. We're guaranteed to live and we're guaranteed to die. And so you might as well have your family better off from that event. And that's exactly how typically it's passed down to their families tax-free. So another stat is that this study published estimated that in 2010, about 60% of private wealth held in the United States had been inherited rather than worked for. And that's really interesting, because it shows you that we need to retrain our thinking. We're taught how to work really hard for money and trade our time for money. But what the 1% is teaching their family is how to make money work for them and how to keep it in their family generationally. And so we need to ask better questions and start elevating our thinking to be a generational goal or solution. And this is something that is so important to me, because when I was growing up, I saw my dad. I mean, he did everything that he could to provide for us. And he was still an excellent dad and was at all of our events. But when I really started thinking about it, time is really our most precious resource. There are infinite ways to make money. So we've been taught how to consistently give up our time for money, but really we need to focus on how can we use money to buy back more of our time? Because I fully believe that we're here for a purpose, and when we're consistently doing the things that light us up and we're supporting the community in the way that really is so fulfilling, that's the best way to live. So if I leave you with anything, I want to leave you with the idea of start thinking about how you can trade money to buy back your time. So this is my story. This is my beautiful family. We were all in the service industry for like a good 5 years paying for college, but that's my dad, my granny, my brother, my sister. I love my mom. She's in the later slide, but I'll show her as well. But I was taught a lot of things about finances that most people were. So go to school, get a good job, get a 401k, and you can touch that money when you're 65. And don't go into debt because it's bad. And I really took that to heart. I worked 2 full-time jobs, went to school full-time to pay for my college education. And what I realized is that yes, I had my college degree, which I was very proud to have acquired, and I didn't have money to show for it. And I was exhausted, right? So that's the whole getting into trading time for money. And so I started asking better questions. I was like, if you look at all of these wealthy people around here, they don't look tired. They have other people doing their, the tasks that they don't want to do. And so I wanted to start thinking, how can I be like the 1%? What are they employing in their community, in their family, that I can employ in mine? Because I saw my family go through a lot of hardship, and I realized that our financial foundation was breakable. And it's because we did not take the time to increase our financial IQ. So a few examples of that, again, just putting my business out there today. So my dad, my parents are divorced actually. But what happened was, my dad came down with congestive heart failure. And so he had to get access to his retirement account. And you actually have to prove an allowable reason to get access to your funds if you're not 59 and a half, if you're still currently working for your employer. And so that really frustrated me, because I'm like, that's technically your money, but you don't have access to it. And it's, again, one of those things where no one tells you about that, and everything works perfectly until it doesn't, right? Another example of that is, my mom had to file bankruptcy after their divorce because we were trying to keep up with the Joneses. So there's just so many things that, looking back, that's led me to this journey of how can I be that person that my parents needed at that time. So these are the 3 main books that I've really I highly recommend if you haven't read these already. So the first is Rich Dad, Poor Dad. It keeps things very simple. It goes over what typically happens in poor and middle class versus what rich people do. And it keeps it very simple. It's a tale of 2 dads, essentially. The second one is Killing Sacred Cows by Garrett Gunderson. So he goes over the 7 money myths that we all believe to be true, but actually really hurt us as a consumer. And the last book, which is the book that we're going to talk about today, and anyone who's interested, I'll make sure that you get a free copy after this, is Becoming Your Own Banker by Nelson Nash. So one of the questions I started asking is, what are the wealthiest companies in the United States? And what I found out was, it is your local commercial bank. And so this is just a bank's business model. And so this is only Bank of America. So I'm going to walk you through this slide, but just for a second. Bank of America received $909 billion worth of deposits from people that bank there. So let's say, for instance, that's us on this call. They paid us $3.1 billion worth of interest, and we paid them $49.9 billion worth of interest. Now, all of this is possible because we leave the majority of our savings inside of banks. So we are the people that are able to make this all possible. And what I'm going to show you today is how you can privatize that profitable business. So just looking at this slide, Bank of America made 1,600% off of putting our deposits in motion. That's all they're doing. They understand velocity. And so today I'm not going to be talking to you about how to take the 10% that you're saving and hopefully get a 12% return. I'm talking to you about the 90% that is already leaving your family. So a lot of people think about this in 2 categories, right? We're taught how to be really good consumers. I personally am guilty of that. I love shopping. The second one is how to be an investor or entrepreneur. But if you think about who's making money on all of that activity, it's the bank. So what I'm going to pose to you today is, why not be all 3 people in the money game at a sustainable pace, right? This is not a short-term thinking thing. This is not a get rich quick thing. This is a long-term planning play. So in the first page of Becoming Your Own Banker, he says, this is a text for a 10-hour course of instruction about the power of dividend-paying whole life insurance. This book is not about investments of any kind. It is about how one finances the things of life, which can certainly include investments. So this is not about rates of return. This is about our need for capital in our lifetime, in our family's lifetime, in our business lifetime. So another thing that gets at what we're talking about today in that same page, he says, this book demonstrates that your need for finance during your lifetime is much greater than your need for protection. So if you solve this need through this instrument, you will end up with more life insurance than the companies will issue on you. So this is the problem, is that if you pay cash, you're always interrupting the forward momentum of your money, right? You're reducing your ability to earn on those dollars. If you use a loan, you are again interrupting the forward momentum of your money, and you're using your future earnings as collateral. So the problem that we're all facing, and why honestly it's so hard for the average hardworking person to get ahead, is that all of these dollars are leaving your personal economy forever. Like I mentioned, typically we're taught, hey, save 10% of your income, but yet we're not taught to look at the 90% that's already leaving us. So I am a very visual person. I'm going to take you through my whiteboard here. And this is just a simple example. So let's say this line represents $0. And there's typically two ways to finance, right? We just talked about that. Paying cash and using credit. So we're going to use red here. Okay, so typically this is what happens. Let's say you're going to spend $20,000 on a vehicle and you're going to pay cash for it. So you're going to save up inside of an environment, and then you're going to purchase that car. So now you have the car and you have no cash, right? And we're going to do this multiple times throughout our lifetime. And again, I was a pay cash person, so it wasn't until I saw this that I realized, you know, we end up in the same place either way. All of this money is leaving our personal economy, and the final destination is large banking institutions. Whereas if you finance, you go into debt and you pay it off. You go into debt and you pay it off. And you go into debt and you pay it off. All the while, the large big banks don't really care if you pay cash or finance, because they're going to say, hey, Misha, thank you so much for your deposit. We are going to sell it to Shellie for an interest rate and then pocket the difference. So how we can do this inside of a properly designed life insurance policy is we're still going to do those same behaviors. So we're going to save up now inside of a life insurance policy that's designed for cash. We're going to borrow against the cash value. So the reason why this is important is because there is no asset that exists right now in the world that allows you to fully collateralize your money and earn on that same amount on a guaranteed basis. So let's say it's still that 20,000. When you borrow against that money, you're going to pay yourself back with interest, just as you would pay the bank. The difference is you have this $20,000 working hard for you your entire lifetime, instead of it just going out the door. So essentially the effect of this is you don't ever have to start over at zero again. And you can put those anyways dollars, as I like to call them, to work for you and your family forever. So I know that's not the best drawing, but that's what I have for you today. So here is how much banks currently store inside of this asset. Usually at the middle class level, you're going to hear these four things. You know, whole life is expensive. This is a really bad investment. You know, it's not a good place to put your money. And why would I do that if I can get a higher rate of return? We are not talking about investing. We are talking about the process of banking. We all participate in the process of banking currently. The difference is we don't own it, right? And everyone knows that the owner makes profits. And so if you look, this is exactly where the banks store their tier one capital. They put it inside of high cash value life insurance policies, billions of dollars. So this is my current family system. So we have a system of policies. There's my dad, that's my mom, my sister, my brother, and me. So we have financed a bunch of things through our family system. And this is our current death benefit numbers. So again, we're talking about how can you be more efficient with the resources that you have now? How can you keep all of that money working for you and your family or your business? And how can you make sure that you're leaving a legacy for your family? So for me, this fit really all of the things that were important to me, because I had seen typical financial products not necessarily work out for my family in the way that they were supposed to. So our death benefit numbers are going up every single day because that's how those policies are designed. I am actually excited to pay premium, because when you own the bank, do you want large deposits or small deposits? Right? So it's just a way to look at cash differently and keep it working for you your entire lifetime. So these are some of the things that we financed in my family. We financed cars, vacation. I use my savings account inside of my policy for a down payment and closing costs for my property. We use it to recapture credit card debt, car insurance, furniture, business expenses. So the power of this is all of that money will stay earning in my family generationally, because it doesn't matter if you pay cash or finance, all of that money is leaving your personal economy, right? So this is a way to keep the money that you've already earned working for you for over hundreds of years. And I'll never forget, because the first time I went to the first time I learned about this, the guy's mentor, his name is Ray Poteet. He used to own a car dealership. He didn't learn about this until he was in his 60s. And he decided, you know what, being the bank in my family makes sense, and I want to keep that money working for us. So he cashed out, I think it was his retirement account at the time. He funded these policies. And to this day, he has an outstanding loan portfolio of over $10 million. So I want you to think about that just for a moment, the scale of that, because what that means for him in cash flow monthly is over $86,000 coming back his way from things that his family would have purchased anyways, or his business partners. So there is so much power and ownership in tapping into one of the most successful businesses, and you can be 2 people or 3 people in the money game. So that is what I have for you today. I'm going to leave you with some free resources after this. Obviously, there's a lot more education that comes into learning about this process, but it's an honor to be here with you all today. And I'm so excited to be able to share this information and hopefully change some lives because of that. So thanks for having me.
Thank you so much, Tarisa and Shellie, for the awesome presentation and lots of wisdom and knowledge. And I hope everyone was taking notes. Just things that, as they all shared, will help us for generations to come. I'd be remiss if I don't mention my mom's actually on here, and she's joining us today. So, and she's been a great example of that generational wealth also. So thank you for supporting the event today, Mom. As we move on, we will be sending those presentations out to you all after we gather all the information together, so you will get a copy of it. So we have time probably for one question, but if you have more questions, please place them in the chat, and Misha and I will gather them and we will send them to the presenters to provide us with the answers to those. So is there anyone who has a question? Going once, going twice. All right, well, if you have any questions, please place them in the chat and we will gather those from the chat. Let's take a quick 5-minute break, just a quick stretch, grab something to drink, and then we will come back on at 11:05 for our second presentation.
Kayla, there was one quick question that came in.
Okay.
In regard to how do they get a copy of the book that Tarisa mentioned, and I believe that she did also mention that we